Hey guys, Joe Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look across markets, talking about some of the themes that are currently in place, some of the news that we've had this week, and as I said on Monday's video, it was going to be a very slow start to the week, which it ultimately was. Not really any news of note, no economic data of note, but things changed today because, let me just pull up the calendar actually, we just had the release of the US CPI numbers for April. Now, these numbers broadly in line with expected, okay? So headline, you can see actually 0.1 below expected, 4.9% year over year, against the expected 5% year over year. Month over month price pressures, though, still elevated at 0.4%, whilst the core numbers were still elevated and in line with expectations at 0.4% month over month and 5.5% year over year. So inflation pretty much still running hot, still running well above the Fed's 2% target. So these numbers, the Fed's not going to be looking at these numbers and thinking that they've won the inflation battle just yet. But it's good to see that progress continues to be made, particularly in this year-over-year number, which fell below 5%, I believe, for the first time probably since early 2021. In nearly, when was it? Yeah, lowest in nearly 2 years now, this headline inflation number. So we're making good progress still. Now, market participants seem to have deemed that as increasing the likelihood that the interest rate hike that we got from the Fed last week is it. We're done now for interest rate hikes, or that's what this data at least seems to be telling us anyway, or that's how market participants seem to be interpreting this data. The hiking cycle done, and we're seeing a bit of a reaction to this actually. Probably the biggest mover is the Nasdaq, which has just broken out to fresh highs since last August. Very much looks likely now that it's going to test these highs from last August in the 13,750 area, currently around 13,350. But the technicals are all looking good, with all the moving averages moving higher, and certainly in a nice uptrend for the year. Like, you can draw out these sort of trend lines however you want, really. I mean, they all point when you trace up these rising lows, they all point towards gradual continued gains. Yields still within recent ranges, but moving a little bit lower. There's the 2-year, here's the 10-year, looking pretty similar, really, still within recent ranges, but heading lower. And if I had to make a bet as to where things are going in the coming months, bank crisis concerns, slowing economy, increased bets on Fed rate cuts in the latter half of this year would all suggest to me that these yields are probably going to be heading lower. And Nasdaq 100 index here might actually be front running that, hence the more than 1% gains that we're seeing. SP 500 also a little bit higher, obviously being dragged higher by those tech stocks, which are sensitive to yields and inflation and all that kind of stuff, but not doing quite as well because, we're still talking about a weakening economy. So the economically sensitive stocks that fill up this index, still not doing quite as well. And the bank stocks obviously not doing as well. Looking at other asset classes, you can see the dollar index coming off a little bit, continues to fail to hold above the 21-day moving average, is within recent ranges though. But if yields are going to keep moving lower and tech stocks are going to keep moving higher, and I think it's probably just a matter of time before the Dixie breaks out to fresh yearly lows. Oil, a little bit lower actually. Oil inventories, US oil inventories saw a surprise jump, so that's just some oil specific fundamentals weighing on the price there, preventing it from getting above this short-term resistance level around $74 per barrel for front month WTI futures. But we were in this quite ugly downtrend, and if we can get above that, then some short-term gains could be in store. Could be looking at a test of this support turn to resistance area around 77, perhaps. Finally, gold. Oh, that's the gold chart. There we go. You would expect could probably continue pushing to the upside. Not really seeing much of a reaction to those inflation numbers because really they were in line with expectations. Don't really change the narrative too much. But if the dollar does keep trending lower and yields keep trending lower as well, then I'm thinking this breakout to fresh all-time highs is probably still on the cards for the weeks ahead. But not a big enough downside surprise in the inflation data to trigger that move today. But yeah, in terms of what we got for the rest of the week, got PPI tomorrow out of the US, if my memory serves me correctly. Yeah, it does. PPI tomorrow. Then preliminary University of Michigan consumer sentiment data. Bit of an interesting week out of the UK as well, actually. So Bank of England expected to raise interest rates by 25 basis points tomorrow. And we need to be watching, or anybody that trades sterling needs to be watching Governor Bailey and his remarks. And then we've got UK GDP data on Friday. But yeah, aside from PPI, University of Michigan survey data, and some Fed speakers, that's pretty much it out of the US. Probably nothing that's going to change the narrative too much about easing inflation. But yeah, guys, hope you all found this video informative. I hope you all enjoyed it, and I'll see you all in the next one.